Hi there, and welcome to Deep 5 Trading at freetradingvideos.com.
This video is for educational and entertainment purposes only. These are not recommendations of any sort, just opinions. There is a high degree of monetary risk in trading. And remember, a fool and his money are soon parted.
Alright, let's do our market study for Thursday, November 15th, 2007. Alright, starting off here, you can see with the S&P, we've basically drifted lower all day there and then got real choppy after we formed a bottom here at the end of the day. And you can see that's a pretty common theme amongst the markets. Oil kind of drifted up at the same time with just one little spike up there at the end. We had this big move up in bonds. I want to show you guys that on the daily chart and what this actually means to the bond market. Here, gold didn't do much, just kind of drifted sideways, but we did have a bit of a gap down, and you guys will see that on the larger time frame. So pretty negative day across the board unless you were holding bonds today. Alright, as we draw back here to the bigger picture, you can see, as we talked about yesterday, I kind of had this feeling that we were going to jump up to this 1500 level and chop around. Well, that looks like I was dead wrong, you guys. We had a nice move down. As we look at the percentages here, you can see the S&P was down the most, being down 1.32%, followed by the NASDAQ and the Dow down just below 1%. Again, now the point we're going to be kind of watching is this lower support line. Here's that gap down in gold we discussed earlier on that chart, and again you can see it kind of popped up, made that little high, but be careful when you get these lines this far apart, you guys. Sooner or later the party ends, and I'm not saying it's going down because we can easily chop sideways. As we go in and look at the sectors, energy was the big one, took a licking there. Again, came back up to this little support area. In trading, support hopefully then becomes resistance if we do move into a downtrend, and that's kind of looking like what happened here in oil, because boy, we rejected it hard. A lot of big ugly numbers out here. You had materials down 2%, you had the financials down almost 3%. The strong areas of the market are the same, you guys. You have the utilities, which were the only thing up today, and we talked about how this was still above that old resistance area, which again should become support. The other good one out there that didn't move too much are your consumer staples, and we knew this already. Here's an example of a company, and this is Emerson Electric, just a pretty standard utility here, you guys. And we took this trade as it broke this red candle. Now, we're not positive on the position, but we're a long ways from our stop, which should be right here under the 54 level. Again, nice volume, everything looks good, but with the market conditions the way they are, any trade you take can be pretty choppy, so you got to kind of hold on for the ride and look for those windows to get to break even. Alright, as we go over here to the grid, again, not too much changed. As you look at the short time frame here, you see this down move's really created, we're in the lower part of those 4-week ranges. Again, most of your green here, as you can see, is in your commodity related instruments with the bonds winning. As I drop down into the sectors, again, there's the staples with utilities. The big loser today, there's that energy down in that lower 3% range, so be cautious there. A lot of red, not too much green. So again, going back to the basics of the market, I'm going to go ahead and keep this rating at neutral until I get some sort of signal. If anything, it should be a -1. But again, I have this small bias that we are going to chop, so I'm kind of playing around that. We've got no extreme sell signals or buy signals going on. And again, with this kind of environment, you guys, I can't stress enough, margin is turned off at this point. As we look over the allocation, again, not too much happening, you guys. We got no money. We got 20% of our account in the market right now, which is pretty nominal. That's 40 of your cash, 20% of your buying power. And of our 6% risk we're allowed to have, right now we're only sitting on 16, so we're not very exposed to this market at this point, which is exactly how I'd want it. Thanks for joining us for the market review. Make sure to listen to Gandhi and have a great weekend.
I've made phenomenal amounts of money for very simple decisions, but I was willing to make them. Somebody had to. Others are looking for highly complex ways of interacting with the markets, when most of the time it's only the simple ones that are going to work.
Thanks for spending your time with us. Have a great evening. And be sure to check out all the other great videos at freetradingvideos.com.